Hello, this is the chart profit video, just about on the open 7th of September. This is the E-mini S&P from the pre-open today. Just draw your eye here to comments made on Wednesday pre-open. Distributions suggest that price above 2900 may be extended. If that is the case, then a fast rejection will take place, and price breaking back below the very minor, that's 20-day point of control at 28.5850 down here, would be the first sign of weakness. And that was written pre-open on the Wednesday. Here's 2900. We had a value area printed on that day above, but we have seen a rejection from there back below 2900. That worries me a little bit. The distribution suggesting price above 2900 is a bit extended, and these are fairly long-term distributions. From my way of looking at things, price back here down below 28.5850, which is the minor controlling price, would be a negative. We actually haven't seen any significant selling since that high day. But what we have seen is 5 consecutive days where the value areas and actually the highs of the days and the lows have all been lower, and that is, I'd say, highly unusual. And as I said pre-open today, that's an indication of weakness, but significant sellers have not yet been marked. In fact, not for 27 days. And the minor controlling price here, we just talked about 25.8550. That should be 28.5850. Sorry, I've noticed the typo on the right here. Okay, so if you're reading the pre-open, obviously that's wrong. It should be this level here, 28.5850. Price below that level, that controlling price, would be the first indication of weakness on the longer time frame. So apart from that rejected test of that anticipated level, I haven't seen any sort of structural or real technical weakness yet. I've also mentioned the pulse chart in here, so let's have a look at that. See, the breadth remains green in the center there, which is a positive, and the pulse chart, the price oscillator at the bottom here on the pulse chart remains above zero, indicating the trend is up. But as described in last week's video, we do have this ongoing negative divergence here between what price is doing, going to a higher high, and what the indicator is doing, going to a lower, possibly a lower low. Now, if that turns down, sorry, that's wrong information again. Let me go over that again. We have a higher high here on price and a lower high here on the indicator, confirmed if the indicator now turns down. So reviewing all of that and making it easier to understand, we've possibly correctly anticipated a rejection of the 2900 level here. We've had a number of lower value areas since that point indicating weakness, but no significant selling yet, and technically hasn't broken down. So this is the level to watch, 28.5850, and price below that would be an indication of weakness. If this is tested, bulls would want to see a quick recovery. So on the daily chart, we're looking here at the E-mini S&P September contract. Here's 2900, and here is 28.5850, and time in here I think would be a negative. You want to see a quick rejection on a test if you're bullish. Further to that, it would be a positive indication to see seeing price being accepted around that 2900. That would be time printing up there. So if we did see a recovery, time printed around 2900, that would actually be a positive sign, I think. Okay, now the equivalent level on the spider chart is 285.70, which is the 30-day controlling price in here. So price below that would be a negative and indicate a retest down here at 280.90. First important level on IWM, the Russell 2000 ETF, is here at 167.60. That's the 8-month. That was built over a couple of months here. It's fairly solid. It's an 8-month controlling price. If we see test of that level at some point, and this is an ongoing uptrend, you would expect solid support at that level, or a rejected test of that level. If it comes to it and we see price printing below there, that would be a negative. sort of rally back towards that level, never quite reached it. It's weak price location, and we've seen the FTSE come lower pretty swiftly, and actually we've broken now below 73.70, which is a really important level, the 2-year, and we're printing below that in a really weak price location here at the end of the week. So if we're looking for any positive signs from indices outside the US holding their levels, we're actually seeing the opposite, and we're seeing further weakness. As described last week, this was a particularly weak pattern. Also in last week's video we discussed the German DAX, which was finishing the week last week below its major, which is here, and again that was a weak position to be in. We've seen further weakness this week, and we're now closing at the lowest level since March back here. I want to just quickly review the sentiment indicators. I drew your attention today in the pre-open to my version of the Ridex ratio, which reached 27.55 on Thursday, and that is what it equals the highest ratio in the database. And it's actually done that while the market's been falling, and that's not usually a good sign in the short term, and reaching its highest level is not a good sign generally. Last time we were up here was back in late January. So the Ridex retail traders remaining pretty excited about the market, even as it's been falling here for the last 5 days. As I've mentioned though, I don't see that kind of enthusiasm reflected in the other sentiment indicators here. The public poll, you see the 4-week moving average in black here of bulls minus bears. That's not particularly elevated. I've noted a lot of comments this week about the investors' intelligence numbers, particularly the bulls percent, which got to 60%. That is the highest since February. We're looking at the bottom here at the net figure and the moving average, but people have been commenting on this 60% bulls. If we just look back on the chart, we've got the investors' intelligence bulls at the top. There's the level 60, and here's the last 1, 2, 3, 4, 5 times that the bulls percentage has reached that 60 level. Certainly doesn't look to have been a problem since 2014. And looking at mutual fund flow, Lipper US fund flows reported equity funds, including ETF. There was an outflow this week of 7.2 billion. That's not particularly large in the week to the 5th of September, and the 4-week net flow, that's the black line, is just below zero, neutral territory. As I've said many times, most of these sentiment indicators are much more reliable when they are overly bearish, often calling in market lows. Particularly this one here, the most recent low extreme, if I remember the lowest I have in the database, came in about here, indicating extreme bearish sentiment at that point. Surely no need to remind you these are all contrarian indicators. So at the moment, again, neutral here, so it's just the Ridex that's the concerning one. Okay, TLT, if you can see it, has just opened lower here, following the jobs data, sits between the 6-month here at 118.50 and the major up here at 121. We were looking for a clear higher low above this level, and we didn't get it. So T-bonds sitting between 2 major levels. Yet again, a lower high below this level or a higher low above this level would be negative or bullish. We've talked about the sentiment for gold recently around this low here, and there's lots of extreme negative sentiment. I find it a difficult chart to become bullish about. We followed the progress of GLD since it tested that 4-month, rejected lower, and then came below the major at 121, which put it in a really weak position. And then down here at 114.50, which is a major value area low, and these often indicate levels where we are extremely oversold and we see a fast rejection of that value level. But GLD is still printing in that area below that level, and that makes me wary. As I've said before, it is possible this major could migrate lower with time in here somewhere, and that would give us a new major level to key from, but that hasn't happened yet. And this is USO, the Oil ETF. I've just been saying the same thing for months, that as long as it remains above the 12-month at 12.79, it is in a strong position in the long term. Again, it's possible that that 12-month or the major could migrate higher, and that would have me looking at the chart in a completely fresh way. But for now, as long as it's printing above this level, we're in a strong position. There's nothing yet happening in the Forex chart to change our view on the dollar. This is a new trend higher. Don't see any breakdown in that at the moment, with the dollar index printing above 94.80. Euro FX chart printing below 117.55. And the pound printing below 132. Okay, that concludes, and thank you for watching.